Hi, everyone. Welcome to Financial Insights. I'm Linda, your accounting coach. I'm continuing our conversation regarding what is clean and completed financial statements. Today, I'm going to give you some additional tips on what to look for to ensure your financial statements are ready to go. Tax season is coming upon us, the annual year end is coming upon us. So, we need to ensure that our financial statements are ready for tax season. So, number one, if you're product based, make sure that your inventory is reconciled. And what I mean by reconciliation, there's different things depending on your business. Definitely do a physical inventory. You want to record what you actually have at the end of the year, making sure you understand what method you're using, LIFO or FIFO. Most people are using LIFO, sorry, first in, first out. So definitely make sure that your inventory is correct. And then also making sure that your cost of goods sold, making sure that all of your expenses are recorded to cost of goods sold because that also relates to your taxes. So you want to make sure that your cost of goods sold expenses are recorded in cost of goods sold. Another item that I usually see that is usually missed regarding small businesses, and particularly if the entrepreneur owner is doing their own books, you want to make sure that your assets are recorded. So, for instance, if you have equipment, and I mean like a vehicle, huge truck, you have machines, I don't know, like drills and tools. I mean that these things add up, even if it's adding up to 5,000 or more, record those as fixed assets. And if you do not know how to do that, reach out to an accountant or a bookkeeper and they can assist you with that. Lastly, another mistake that I see regarding small businesses and even nonprofits is having your loans recorded correctly at the end of the year. Now, you have received the funds, so it's in your bank account. However, you still need to record that as a loan. And at the end of the year, that loan balance should match the statement for if you received it from whatever lender. So make sure that your loan balance matches the lender's information or website, I should say. So those are the three tips. Once again, making sure that your inventory is correct, your assets are correct, and when we say assets, making sure that you're depreciating your assets. And then lastly, making sure that your loans are recorded correctly. So this is all part of having clean and completed financial statements. And as you can see this week, there are multiple things that need to be done to have clean and completed financial statements. It's just not connecting the bank account or credit card to a software, but there are actual tasks that has to be done. You have to record the transactions, you have to reconcile, you have to review, you may have to run additional reports. Your accountant or bookkeeper may have to do some journal entries, which is relating to fixed assets. They may have to do a journal entry to get the loan balances correct. So make sure that you have a trusted bookkeeper and accountant who can help you with that. And don't try to do it on your own. Pay someone to do that for you so it can be correct and so you don't have to pay even more in the long run. If you do need help regarding cleaning up your financial statements, contact us at services@insightfinancialindy.com. You can DM me on LinkedIn or Instagram or Facebook. So hopefully you find this information helpful, and I'll see you next week. Take care.